Everybody, I know that I'm outside right now, but don't worry, we are going to jump into the charts. And in this video, we're going to be looking at some very specific setups using only the volume profile. We just finished up trading for the day, and the weather is so freaking nice. I wanted to get outside, get a little fresh air, do a little forest bathing, get some sunlight, and then I'll be going back inside. I'll do the rest of this video, okay, inside the charts. So in this video, let me preface it, we're going to be looking, like I just said, at some very specific setups using the volume profile. A few, probably months ago now, I did a video just talking about how I'm able to trade for a living. And from a method perspective, it is because of volume profiling. I truly believe that this is a superior way to view the market and to interpret the data that the market is giving us and that the market is continually generating. And so in that video, I did a little bit more high level and just explained what the profile was, why that information is so valuable. And I shared my chart definitions, a couple other things in there. And it was high level, and it wasn't very specific of how exactly to place trades based on that information. And so in this video, I want to do something a little different and look at some very specific setups, okay? The setups that we're going to be looking at happened today. At the time of this recording, when I get this and that and, you know, put them together, it'll probably be a couple days later, but these aren't cherry picked out. These aren't even trades that worked out that well in terms of them shaping and playing out. We got kind of a weird variation on one of them, and I'll explain all that when we look at it. But I wanted to not cherry pick out specific examples that were beautiful. I wanted to kind of show you more of a realistic, raw, just in the, you know, what we'll probably get most days type of a setup, okay? And this is one of the huge issues and why I have no passion to make videos like this, because when you're out there looking for a setup, looking for a signal, looking for a system, 99% of traders that are doing that, their mind is in the wrong place. And what they're looking for is they're looking for some type of a secret or something that, some type of information that they can get where they don't have to pair any skill or any competence with it, but it's just gonna somehow make them a ton of money. And this is why that doesn't work. And if you're in that mind frame of chasing a signal, chasing somebody's system, chasing something that is a secret method or something, if you're doing that, the reason it's never gonna work for you is in the market as traders. If you wanna make it very simple, what we're doing is you and I, we are trying to find repeatable patterns in the market that we can exploit for profit. That is our job. And when we find those, we're all looking for some type of support or resistance to get in on. If the market is not at support or resistance, there's no reason to enter. And if you don't have an edge, if there's no repeatable pattern that you have found and you're exploiting, there's no reason to enter either. So we're all doing the same thing different ways. So if you have a technical rules-based system that says when this line crosses this line, if this line also does this, then that's a signal. That might be the repeatable pattern you're looking for. You might be looking for actual candlestick patterns that when you see this happen, you're looking for a reversal, or when this happens, you're gonna get in on some continuation, right? We're all doing the same thing differently. And what happens is anybody can cherry pick out very nice examples of this is exactly what we're looking for. But in real life, when you're trading, you will hardly ever see the ideal situation. What you're gonna see is some type of a variation of that repeatable pattern. The repeatable pattern, yes, but some type of a variation of that. So if you don't know, if you have no personal skill or competence with that approach or with that setup, then in the market, you're not gonna get that ideal, beautiful entry, so you're not gonna be able to take advantage of it. Or if it shapes up very nice, but it doesn't play out just the way you think it's supposed to, you're not gonna know how to react to it, and you're not gonna be able to take advantage of that either. Okay, so it's very important that you pick these things up, you learn things, but then you have to also get very good at them as well. And so in this video though, I do wanna share you a couple ideas that you can start observing immediately and put them into your method, put them into your approach, start seeing how these play out and seeing if you wanna incorporate them, because these are very powerful. And these are very, very good trades. So we have one on the Russell we're gonna look at. This is me day trading, so these can all be tweaked, but we're looking at the Russell, and the market was in a stance where we went from being consolidated, we were just very range bound, the market was going nowhere, we just kind of balanced. We went to imbalance. And once that imbalance happened, we were able to use the volume profile to get an entry and take a little bit of continuation out of that. And then on crude oil, we're going to look at another trade where the market was being volatile. We were moving, but nobody was in charge. We were not in price discovery mode. Both sides were being active. And in that environment, we were also able to use the profile to enter and take some profit out of that as well. Okay, so I'm gonna finish up this walk and just enjoy a little bit more of this. I'm gonna head back, we'll jump into the charts, I'll see you guys there, and we will look at these specific examples. I'll see you guys real soon. Welcome to the Inside, everybody, and let's dive into these charts. We're gonna look at our first example, which is going to be the Russell. Now, let me explain what we're looking at here, just so this information comes across correctly. We have up on these charts two different time frames. So on the right-hand side here, this is a 15-minute chart. Each one of these candles represent a 15-minute time frame. On the left side here, this is what I call trigger chart. Okay, it's a very zoomed in view. It's not time-based. It's based on how much distance we cover. This is a very drilled in, extremely noisy way to view what the market is doing, but it's something I rely on, something I love, especially when I'm getting ready to enter a trade or pull the trigger. That's why it's a trigger chart. Okay, this is set up as 2 of the 4 time frames that I use when trading. This is a daily time frame. We have a 30-minute, there's a 15, and then my trigger. Okay, one quick thing to point out, I'm a very big fan of not showing your P&L while you're trading. And the only reason that I have that on my chart, not to be contradictory to anything you've heard me say before, is I started doing that for the live trading experience. It's a very nice addition when we're trading, as a bit of a scoreboard, but also just the running P&L to see everything. It's a very, very nice feature, and that is the only reason that I have that up. Okay, we go live and trade every single day, 9 a.m. Eastern Time. We trade through to the close of Europe. And so if you'd like to come hang out, trade live with us, there'll be a link in the description. You can contact me and check that out. Would love to have you hanging out with us as well. Okay, now, so we're looking at our trigger chart. We're looking at this 15-minute. Let me go ahead and zoom in on our trigger chart here. And let's zoom in on this trigger chart and get the context of what exactly is happening. Okay, forgive me, I had a notification I was reading. Okay, so this is where the Russell has opened. This was 9:30 in the morning. We've opened, and we spent about the first 15 minutes working our way down slightly. Okay, didn't change much, but we have dropped, and we were putting in these, we failed to take anything to the high side. We just were moving down. And then after about that first 15 minutes, we just went sideways. And we spent a good couple hours completely range bound with a small attempt to the downside, a small attempt to the upside, and everything else extremely sideways and balanced. Now, we know just from very basic market movements that the market is either going to be in one of 2 modes. We're either in price discovery mode, where we are exploring prices, advertising prices, trying to attract either buyers or sellers, or the market is in balance, and we've found an area where buyers and sellers are both interested and they're doing business there. Okay, the other environment is very similar. It's lumped in with being in balance, but sometimes we're in balance not because buyers and sellers are both active and happy here, but because nobody's present, nobody's really doing anything, volume's dead, and we're just laying sideways. Okay, but this is what's going on here. We're in this sideways range. We've spent a good couple hours here. And then we broke out to the upside. Balance is always going to lead to imbalance. And that's what we have here. The market is balanced. The bulls have taken over and we've broken to the upside. Now, once this happens, this sets up some very nice context for us. We know that we've been in balance. We know that the bulls, in this case, have just taken over, or at least they seem to have taken over. Once this happens, the market's been in some type of a range-bound environment, and then we've broken out, we have something to do. Now, this is a different video, but it's very important to understand what mode that market is in. If the market is in price discovery mode, and you are stepping in that on the wrong side, you're going to get punished. And if the market is balanced, and you're holding, looking for this big move, it's not coming, okay? Or probably at least not when you're expecting it. And so it's very, very important to understand for your trading what mode the market is in and be able to identify and then trade appropriately for what we're doing and the time frame that you're on. So in our example here, we were in balance. We've broke to the upside on a nice strong rotation. All right, this is just over 6 points for the Russell. That's very big. And you can see all these other rotations are around or under 3 points. And with the exception of maybe one big, almost a little over 5.5 point move here with no counter rotations. But other than that, pretty much all of them are about the same size, over 6 points. This was the largest move of the day. So we put in this move, very small counter rotation, and we've continued up. So it looks like the bulls have taken over and we're going to explore higher prices. Now, what do we do? Because as I said outside when I was recording, just because you have some type of a bias to the upside or the downside, just because you feel like you have a pattern, doesn't mean you can just enter blindly. We still have to enter against some type of support and resistance. If we're not at support or if we're not at resistance, there's no reason to enter the market. You're not going to be getting a good entry. And so in this example, and this is very nice when the market is range bound and we break out of that range, there's a couple things that are very likely to happen. Okay, one of these things. Either we break out of range and then we come back in. Now, if we come back in and we start accepting that previous range, more than likely, we're going to explore the other side of that range. And there's also a high potential that we'll just keep going and explore lower prices, right? In this situation, higher prices if the context was flipped. So if that happens, that's a likely situation. There's nothing wrong with that. That could happen. And in that situation, what just happened, this move higher, was some type of a stop run. It was some type of a failed attempt. Either the bulls stepped in and ran out of steam, so the bears took back over, or the bulls stepped in and as soon as prices got higher, this attracted more sellers. These prices became popular for sellers, and price got driven back down. So that's a situation that can happen. If the bulls stay in charge and if this is a strong move, then what we'd want to do is look for something to lean against and join the bulls and join the side of strength. Okay, now pretend with me that this volume profile is not here. Okay, on both of our time frames here, I know what you're thinking, and for me too. I hate, even for pretend, to imagine a world where there's a chart that doesn't have a profile on it, but just for the sake of this example, bear with me. Where exactly would your support and resistance be? Okay, if we didn't have this profile on here, we were just looking at our candles, just looking at the charts, would it be somewhere down here with these wicks that we were putting in kind of at the same area? Would it be one of these wicks up here? Would it be one of these bodies of these two candles? In this exact situation, it's kind of hard to tell. But since we have the volume profile, we have all of this area and range that we put in, a very clear low volume area. And then we're starting to build up some more volume up top now. We're starting to build another part of this profile. So going from what we know about volume profiling, again, you can watch the other video if this doesn't make sense, but low and high volume areas are what we get out of the profile. These low volume areas, what we're seeing, something like this, these act as very nice support and resistance levels, okay? And we can expect price to either hold these levels very nicely or to move through them very quickly, the same way that we can expect that to act around support and resistance. All right, so this is the context as we have going up. The market's open. We drifted slightly lower during the first several minutes, and then for the next couple hours, we just went completely sideways. We broke to the upside. Now, for me, what I'm looking for now is some type of something to lean against, and in this case, I'm looking for a retest of this LVN. If we come back down and we hold this low volume area, which is also the initial balance high, then I'm going to be looking to enter in here. I don't blindly enter trades. I'll stock this on the DOM and watch the order flow. But this is my area that I'm interested in. If we can get here and hold, I'll be looking to join longs, looking for something more to the upside. Okay, so let me go ahead and play this out. This is going to run at 60 times the speed. The market's been rather dull, and I don't want this to take too long. But we have this nice strong move up. The profile is developing, and price is coming down slightly. A bit of a pullback here. We'll spend some time chopping around and see how we react here. Okay, so in this situation, we get right down inside to that LVN. There can always be some variation of this, hit or miss by a few ticks. But in the example we're seeing, and when we took this trade, it came right down to this, which was the initial balance. And it also came right down to that LVN. And then it started building up. It's building up more energy and building up more of a profile up here, and making this become more of a defined LVN as we have that develop. Okay, so this is a very, very nice way, one, to use the basic idea of we just broke out of a range, we're in price discovery mode, we came back and retested that range. If we hold, very likely that we'll keep exploring higher prices. Okay, and then we can use the profile to lean against on those LVNs. So this is a very, very nice way to use the profile. We were able to enter on this and get a few points per contract out of this trade, and it ended up playing out very, very nicely. And also it was very clean. All right, so that's kind of the first way we can use the profile. If you have any extra questions about this, then you can always shoot that to me in the comments. I'd love to even do future videos on this. I love talking about the profile, but really I like explaining it more of what exactly we're doing with this, right? Because as trading, any type of a method we're using, we have to get in the mindset that we are craftsmen. This is our craft. This is our chosen way to view the market, and we have to get very good at it. And the volume profile really requires you to contextually know what's going on. Just because we get to an LVN does not mean it's time to buy, right? We have to understand contextually the picture, and being able to walk through it and determine what's going on. Then the profile gives us very, very valuable information that we can use. All right, so this was a very clean trade, very beautiful setup, worked out very, very well. Let's go ahead and look at crude oil. This is crude on the same day. And let's take a look at what's happening here with the context. Same thing, 15-minute time frame. Here's our trigger chart. Now, crude oil opened up. And what we've done is we tested lower slightly. Then we had bulls step in, we pushed higher. And then up in here, we've had bears step in that drove us lower. Okay, so what we had is our opening range low. We had our opening range high. We came down, violated the opening range low. We came up and violated the opening range high. This is very important to understand, and I don't probably talk about opening ranges that much in the other video because it's a deeper topic, and it's not easy to just blanket some of these things. They have to be explained. But opening ranges in this type of a context, this is showing us that both sides are being active. Okay, we're not being directional. Even though we're volatile and this is covering some nice range here, this is not one side taking over and just running for the day. More than likely, this is going to end up being choppy. And for this to just keep going and push higher for the rest of the day, that's not the most likely thing to happen. And so when we see a setup like this, with a day forming like this, where we have opening range high and opening range low both violated, and both sides being active, then this is very, very good information for something that can shape up and how we can use the profile, okay? So what we're seeing here is we've had some range extension to the upside. The bulls have taken over, but the context here is different from going from being balanced out like we were on that last trade to one side just stepping in. This is both sides being active. This is a very different type of an environment we're in, even though it's the same day and even the time frame isn't that far off. Okay, so let's see how this plays, understanding that, okay, for this just to go in one direction is not most likely. Some type of a fading opportunity it will be much, much higher quality, and it would be much more attractive to me. Okay, similar thing though, as long as we're holding above this LVN right here, then the potential to keep pushing it higher. Again, not for the whole day necessarily, but at least keep pushing higher. That's still valid. So we're going to spend some time chopping around. And before we get there, let me tell you in this situation what we would be looking for. Okay, what we'd be looking for is a test of the value area low. Okay? Understand this context. The market's opened, both sides are active, and we're now, we have kind of a weird value area. The value area high is the high a day, basically. Point of control is all the way up here at the top. There's a small LVN right here that's formed, and then we have this lower distribution, all right? This is not setting up to be a double distribution day. A double distribution profile is very specific and it needs to be handled that way. This is early in the session, and even though there's two distributions, this day is not setting up to be a double distribution day. The day types, the profile shapes, all of these things are not complicated. And let me take a little moment here. I know for a lot of times we can look at something like a volume profile, and if you're not used to it, it can be overwhelming and you can feel like it's way too complicated. And I get this all the time from traders. And the truth is, it is absolutely not complicated. There is a learning curve to it. And there's some things that you will have to know, but they are incredibly simplistic and they make so much sense when you understand them, as opposed to going through your whole entire, probably brief trading career looking for this line to cross this line. But when you really understand what the market is doing and why, and you can see it per trade here, and you're not using a lagging indicator, okay, this is a VWAP, this isn't a lagging indicator, and there's no signals here. But when you're just looking at what the market is doing and figuring out what it's done, what it's trying to do, and how good of a job it's doing, it's such a different experience to just, hey, this line crossed this line, I made money, cool. This line crossed this line, I didn't make money, I have no idea why or what to do about it, okay? And so I would really, really encourage you, there'll be another link in the description as well. If the idea of volume profiling makes a lot of sense to you and you want to dig that deeper, I have some amazing materials about this on everything we've just covered: opening ranges, profile shapes, day types, all these things that I can get you in touch with. It's very, very nice. Obviously, it's very important if you want to go down the road of volume profiling. Okay. So this is what we have shaping up here, and what we're looking for is to play the value area. When both sides are being active, what we're looking for is to avoid the middle. You don't want to find yourself anywhere inside the middle of value if both sides are being active. If you find yourself in a position where you're putting on trades, taking wins, taking losses inside of the value area, or I shouldn't say wins, but if you find yourself putting trades on and getting stopped out inside of value, then you're doing something very, very wrong, okay? Specifically on days when both sides are being active. So what we need to see here is some type of an attempt, and we want to see a hold of the value area low, okay? That's what I'll be looking for. Now, in this trade, this happened a little bit after we got off the call, but I posted this inside the group, and I actually entered this trade in two different places because of how well we were holding VWAP. Okay, so we've come down. Let me just zoom this in a little bit. VWAP, this is the volume weighted average price of every single price that's been traded throughout the entire day. This is the average price that everybody has paid. Okay, so we've come down and we're defending this. And I have a couple very nice trade setups that are based on a VWAP hold. And so we came down, we held. It looked like this was going to hold and then continue higher. The point of control and the other side of value being my targets. So I went ahead and put on a smaller position here. And what I exactly said in the group was entering here. I think I entered at the 54.34 right down here. And if we dropped down to the value area low, I'm looking to put more on. And this was kind of just so I didn't miss this trade, because I would have kicked myself if we based here and I didn't grab anything. Okay, so I went ahead and entered this trade and was looking for this to keep pushing higher. And what we did is we started to chop around VWAP, slip through slightly, hold and not get above it. And eventually here we make a rotation down. Something else I'd like to point out, I think I said this when we were outside. The other example we looked at was a fairly clean, just very nice consolidation, breakout, pull back, hold, and continue that we saw in the Russell. This is an example of a beautiful setup that does not play out well, okay? And let me show you exactly what I mean by that, because it's more likely than not we'll get some variations of exactly what we're looking for. Okay, so this right here comes down. We start to base a little bit right at the value area low. Okay, that's a green light, and that's the entry. This is a beautiful spot for an entry. We have a strong rotation up, push through VWAP, and there's a couple different ways you can look to play this specific trade. And we're getting ready to go for gold right here. Okay, this is basically it right here. When we come down and we test value area low, you could enter as soon as we test and start to hold, but you're taking a lot of information risk at that point, okay? When you take information risk, what you're trying to do is get a very good price. And then if you take price risk, what you're doing is you're waiting for more information. And if you wait for more information, you typically get a worse price. So this is a very important dynamic to understand as traders. We're always taking either information risk or price risk, and not one is better than the other, but in certain situations, one might be much better than the other. Okay, so in this situation, you could have entered the first time we tested and started to hold, and there wouldn't have necessarily, that would have been a little riskier on the information side because there wasn't enough information here to see a clean hold. We just came right down and held. But you would have gotten a very nice price in case we don't come back. What we did here, we came down, tested that low, held, had a nice pullback, and then we came down and held it again. Okay, this kind of drop down, test, pull back, and then have a secure hold, that is beautiful, exactly what I want to see. On that hold here, this is load up and look for this to keep holding. The target is usually somewhere around VWAP or point of control. A lot of times these are more closely aligned. And then you'll be very interested, probably have to scale something in there. The ultimate target is the other side of value, all right, wherever that ends up being. So let's see what we ended up doing here. So this starts to hold. We start to get a little pullback. It's just, it is on. This is a very, very beautiful setup. And then crude ends up coming down, spending some time chopping around this value area low, which doesn't necessarily change anything. Contextually, we're still holding it, so that's fine. And then we start to slip through. This right here is starting to make me nervous. We don't actually go far, only about 10 cents down, but we dip slightly out of value before coming back to it. Now, this is on 60 times speed, so in real time, when you're seeing this happen and you're seeing this drop, this was a very difficult trade to hold through. The last couple days on crude have been auctioning very poorly, and so seeing some type of a not clean hold didn't freak me out that much given the stance the market's been in for crude, and so that kind of gave me a little extra energy to hold through this. Here's the second worst thing that happened. Value area shifted dramatically, and the point of control shifted all the way down here, okay? Because this is, and again, we're watching this on 60 times speed, so this right here took a long time to play out. And because the market just sat here for well over an hour, then we built up a lot more volume. We changed the whole context of what we were seeing. And then I lost a lot of confidence in this trade because now we're not entered at value area low. Now we're entered right at the point of control, or we're, my second entry, near this point of control, and we're right in the middle of value. This is not where you want to end up being, okay? So this came down. We didn't spend much more time dropping farther from here. And so if we would have started continuing down, I would have looked to bail on this trade. Not sure what would have happened from there. But what we ended up doing was just basing in here for a little bit, putting in a lot more chop, pretty awful price action, testing up, getting, retesting this value area or VWAP, pushing right through it. And then we were looking for some kind of a test of value area high, okay, which we ended up getting. And this is the next day forming here, okay? So that happened, this move right here happened right into the close, okay? And so looking at this example here, again, this is a right in here. When this happened, this was a very beautiful setup, and you'll see this happen quite a bit. And we'll move back into value. We'll come back down and hold, not putting in like a lower low, or just kind of hold. And on that second retest there, that's essentially confirmation, if you want to call it that. And then we'll get a nice move to somewhere around the point of control, and then potentially the other side of value. Very high quality. That's a trade I would look to take all the time. There's a couple things contextually that you have to know about this. And one of the main ones being is you only want to trade the extremes of value area on days when both sides are being active. Okay. when both sides are not being active, you don't want to sit there and try to fade the extremes of value, because more than likely when we get to one of the extremes, we're going to keep going, right? So, but if both sides are being active and we're not trending and we're not being directional, that's when you can really lean in and capitalize on this. All right, so it takes a certain level of skill to be able to pull that out and identify what exactly is happening contextually in the market. The second thing is you have to let this form. Okay, the value area of the first 5 minutes, 10 minutes of the day doesn't mean anything. There's not enough volume in that profile for you to lean against it or for you to take it serious. Now we find ourselves, over here. This is closing in on the last, couple hours before the market closes. The whole day has formed. There's, most of the volume for the day has already gone off in here, or a huge chunk of it. So once we've had all of this take place, we've broken out, we've come back in, that we can start leaning on some of these levels intraday. We don't want to do that early on. Okay, so there's several other things that I should say and can say about the profile, but these two setups here are extremely nice and just more, if nothing else, to paint a very good picture of how we can use the volume profile and some of the power behind it, understanding that obviously we're just kind of tipping the iceberg here. Now, any type of trade signals or entries are extremely risky if you don't know what you're doing with them. Obviously, we know that trading any type of, in my case, derivative involves a substantial risk of loss, and it's not suitable for all investors. Past performance is not necessarily indicative of future results. But when you take that information and you kind of go out half-cocked with it, you're really setting yourself up for failure. Okay, both the things we talked about today, you have to have a certain level of competence to be able to pull that off on your own. And if you can get there, and if you can build up that skill and you can get that information and build up your knowledge bank of what we're looking at here, the volume profile is a beauty. And these are a couple things. So I hope you enjoyed that breakdown of some things we look at. These were both trades that we've taken today. So not cherry picked, but gave you the good idea. Okay. So if this was a video that you'd like to see some more of, you guys can let me know in the comments. The last video I put out was on stop hunting and didn't really get much context there in the comments for what video to do next. So if you guys can chat with me, let me know. And if not, I'll just make my own decision on it. All right. Be well, everybody. You can check out the links in the description. And I will see you guys in the next video. Happy trading and watch your risk, everybody.